So what happened today when you said you tested some of their protocols successfully, you were able to trade one of their tokens, essentially, right? Wasn't that what happened?
Correct.
That was an executed trade.
Yes, it was a test trade. It was an executed trade on mainnet of a test token using their protocol, so that was very exciting.
And that says a lot, because everybody's kind of holding their breath, waiting for that to become widely employed, and one of the problems, or potential problems, was this whole thing doesn't work. What if we try and it just fundamentally doesn't work yet with the technology? And sure enough, today's the day.
And I think that's one of the exciting things, and as a lawyer in the space, it's exciting and also terrifying at the same time, because you have this technology that can improve the way assets transfer, the way you track assets, but there's a little bit of a paradox or a catch-22 in that even though it's easier technically to transfer some of these assets, because you're talking about real-world assets, you're talking about securities, you're talking about regulated products, it's not any easier legally.
No.
And so threading the needle and finding the points in the transaction life cycle where you can make improvements without running afoul of securities laws, making sure that you comply and work with market participants, I think all of those are really important to the ecosystem as we move forward, and I think that's part of the reason when you look at Securitize and their DS protocol and kind of putting these tools together, you can start to build an ecosystem where, you know what, maybe a year ago it looked like it would be kind of a long time or a very tough road ahead for this type of industry to thrive. But after months and months of work, you start to see some progress, proof of concept, and I think that'll help drive adoption.
There's been a lot of static or bad advice out there, and so you still have people making mistakes that are very predictable. It's very difficult to predict who's going to be successful, but it's very easy to predict who's going to, crash against the wall.
Really? Okay,
and the people who are today, US based, the mind of management is in the US, and they're trying to go to Switzerland to create a foundation to do an ICO, or they're telling me, oh, I've been talking to this amazing lawyer in Malta who says we can just do it there.
Yes.
That they're missing the big point, which is in the United States, the Securities and Exchange Commission is a bit old-fashioned. They have the Securities Act of 1933, the Securities and Exchange Act of 1934. Those acts have not needed giant amendments in the last 90 plus years. They've been in, or 80 plus years. They've worked just fine. And anyone who thinks today that the SEC feels that there needs to be wholesale changes to their rules hasn't dealt with the SEC. And so what I'm seeing from entrepreneurs is smart entrepreneurs that are working with platforms like Securitize and understand compliance, et cetera, are really able to take advantage of this market. The people who are trying to position themselves too much as pioneers, they're going to keep getting the arrows. And those arrows are going to be increasingly painful, whereas the settlers, the people who are going to do things in a compliant way, they really are going to get the land. And they're not going to have to worry so much about the arrows.
I do think that some countries, for example, countries in Europe, I'm not sure about Asia. I'm still skeptical because they're the ones who keep moving and moving the deadline on the issuance of the licenses. So in Europe, 100% sure we'll start having licenses to be able to trade security tokens. So if we have the licenses in Europe, the rest of the world can also participate. So, and I truly believe that security tokens is the future because, I mean, think about regular share. Like if you have Apple stock, you cannot go to Apple and buy iPhone. You cannot go to Apple's website and vote for the next product or feature you want to have on your MacBook Air, unless you're a majority stakeholder. But your stock, I mean, it's nice to have. It brings you money, but you don't feel the value. You don't feel like you contribute to the society. With security tokens, you can vote on the platform. You can be a part of the management of the company, and I think that brings like so much excitement to people to be a part of it. And it also opens doors to retail investors. Like so many people can participate in security token offerings instead of like IPOs. I mean, it's really hard to get there, and it's really expensive for the company to hold your IPO. STO and other side, I mean, it's not easy. It's not like utility tokens, but it's much easier than IPO. And
There it is.
access to the capital is crucial for the company.
Absolutely, absolutely.
So I do think it's the future. It's really hard to know, will we have everything in place next year? I think the next year is going to be the starting year, like the moving year. Like we will get like here and then we'll go way up.
Okay.
I honestly
Launch
truly
pad.
believe that. Like,
2019.
I remember I saw a presentation of Polymath and they show the line like we're going here. It's like, oh.
Yes.
So I do think that 2018 is going to be like moving because
hockey
we're already
stick.
here.
Got it.
There are already a lot of competitors, there are a lot of exchanges, there are a lot of custodian services, compliance services. Not enough, definitely not enough.
Yep.
And I really think there are more going to appear in the market. There are a lot of people coming from traditional markets, coming with compliance, coming with banks doing like crypto fiat. So I really think that more people will come to the industry, more competition will be here, and competition is always good. So we'll have that move.
Okay, so where do you see the future of security tokens most, I guess, as the most exciting place? Is it going to be in the tokenization of assets, like my house, I'm going to be able to sell my neighbors like 3%
No one wants
of
your
my
house. Sorry.
Right. Okay.
There's
New
no liquidity
idea,
for
new
half of your
idea.
house.
Right. No. Okay. Then where's the
I
exciting
think we're in
application?
such early innings right now
Yeah.
that it's very hard to say.
Right.
That said, I think there is a real use case for things that have fewer than 200 or maybe fewer than 2,000 investors.
Okay.
Where they can build a community around the ownership of stock or something else, and that investors can get some liquidity for that security. And it's not going to be great liquidity. I mean, if you're talking about tokenizing maybe a 100-unit condo building in Florida,
Yeah.
you might have 300 investors.
Yep.
Most of them are retirees. They don't need to sell, except for that one guy that really does want to sell.
Right. Right.
And so what does he do right now? He has to go to his attorney and say, okay, you put me in this thing. How are you going to get me out? Do you have any other clients that want to take my place?
Right.
And the attorney's like, yeah, I'll find somebody, and that might take 6 months.
Yes.
This tokenization allows that investor to go to an ATS, a broker-dealer,
Right.
prove to them that he owns this asset.
Right.
That attorney knows he owns the asset because
Yes.
he helped him to get into it.
Right.
But no one else really does.
Sure.
The token will help him to prove that
Yeah.
he's the owner, and then he can put up an offer to sell it. These are not going to be heavily traded. I can't
Right.
imagine us saying, "Oh, look who just moved in. Now we need to buy," or there was really good foot traffic at
Right.
the rental office today.
Yes.
So therefore, we should be buying up this this development. Those things aren't going to be happening.
That's interesting.
So
Yeah, that's a good
you're
observation.
not going to get market makers to come in and say, "Oh yeah, we're a penny wide, 10% of the building up." There's no market for that.
So you guys are also a market maker. That's a great
yeah.
term also that we hear, but nobody knows what that means. So I mean, maybe they know it's a liquidity creator, but how, why,
Right, so
where,
they think of market
when?
makers as those guys with the colorful jackets
Yeah.
that sit in Chicago.
Right.
We used to be the colorful guys that sat
Okay.
in Chicago. We
Got
still
it.
are in Chicago with less colorful jackets now. But a market maker is simply someone willing to stand in a crowd and say that there's a price that they'll buy something for and a price that they'll sell it for. And in the case of digital assets, or really just any electronic market, it's people who have computers that can make up those same decisions.
Yeah.
And they're indifferent to whether they buy next or sell next.
Yep.
And they're going to make a fair price no matter what. Sometimes they have obligations to make prices, and sometimes they
Okay.
don't. It really depends a lot on the market and the market microstructure.
Uh-huh.
But that was our industry for a long time, mostly in equity derivatives, and then it was in Bitcoin and digital
Wow.
currencies across different markets.
Yeah.
Where our computers stood in and said, "There's a price at which I'll buy 10 Bitcoin and a price I'll sell 10 Bitcoin."
Yeah.
And those were. We thought those were fair prices, and people would trade with us, and
It seemed to work out.
it
that
seemed to
way.
work out all right.
How do you go about sourcing both sides? Where do you find all these investors, and how do you find all these issuers?
So the issuers, it started with me and my team just putting the information we could find online and putting it on our platform from their websites, from white
Got
papers
it.
and things
Oh,
like that,
interesting.
and then reaching out to that team and saying, hey, here's what we were able to find. If you'd like to add more or change it, please feel free. We'd love your participation. And so that's that's how we started, because the idea was that we needed to provide some use cases. And as we found since our launch, a lot of issuers have directly reached out to us and have filled out our forms to provide their information live.
Oh, that's great.
It's totally free for any issuer, so it doesn't make a lot of sense if you just stay away from our platform. We don't take any fees from your listing. It's just a way for you to get more exposure for investors. So we found that we haven't had much issuer pushback, and we have not had much issuing platform pushback. We've actually are in discussions with some platforms that want to just mass list all of their deals
why
on
wouldn't
our
they?
platform, because again, why wouldn't you, right?
Right.
And so we have some marketing and promotional services that are, can be purchased to provide more of that branding space on homepages and things like that.
Yeah.
But it's totally free as the initial package to list your offering. And then for investors, they're interested in finding out this information as well. And so we've started by reaching out to our own network through the blockchain space, who are people that either are interested in security tokens or people who have participated in utility tokens who want to learn more about security tokens but don't really know where to go. This is a great spot to direct them. And so we've started to direct them that way, as well as working with SEO and other algorithms to work with that as well.
So I think when we started this process, we envisioned thousands of investors, internationally that would be interested in this, and there just really wasn't that strong of demand as we initially thought. And maybe that will come as the market continues to evolve. I think that the liquidity is more limited today than people think. Right?
Interesting.
So when I think of liquidity in markets, there's really two things that bring liquidity to markets. It's high frequency trading and the derivatives market, right? None of which exists for private assets today.
Right.
So liquidity will be very, very limited. And again, because we're a venture fund, we don't really want liquidity right away. Meaning, like if you buy this asset, you should buy it because you think we're investing in great companies, and maybe at some point, several years down the road, you want to sell it. And that's kind of how we think about it.
Yeah.
I think that liquidity is going to be much more limited than people anticipate for the next couple of years.
Interesting.
But it doesn't mean it's not a good reason to build one, right? So it's a better form of ownership, and so I think that people should think about that when they're building one. This is how I believe all assets will be structured in the future.
Yeah.
And so if every asset becomes a digital asset, why not start now and have a better way to own your assets?
It's really an interesting time because we are seeing companies and exchanges like the NASDAQ is looking at how they can become more of a player in the token world. So that's naturally going to be a security token. It's unlocking a whole group of investors that are institutional investors, Coinbase's custodian capabilities. We just see there's a massive movement, and that money will flow in because the security token, or I should say digital security side, gives a lot more liquidity to a position with a company. And it might not just be the equity of the company. It might be specific offerings. Like ours isn't the equity of the company. Ours is against a specific area focus that investors can come in and benefit while the company increases in value and participate as more of a community, but then have that liquidity side. So we think security area is just going to explode.
Are you noticing any kind of trend in terms of the kind of companies or people that are coming to you to do an issuance?
I think the people are getting better. I think the quality of people are getting better. I think people are coming to us who have more visions of companies than kind of ideas of the past. The number of STOs and people who are accepting that the thing they're going to launch is security has definitely increased.
They're not resisting, saying, mine's a utility, it's a utility.
I mean, when we say STO, we really mean a token that is intended to be a security for its entirety of its life, right? That's the true STO.
Got it.
We're seeing two token models where there's revenue or a dividend paid to a security token holder of a utility token, which serves as purchasing power in some kind of network. There's tokenized assets, tokenized real estate. As you know, there was a East Village condo at $30 million that was recently tokenized. I think we're going to see a lot of this
now that
grow.
wasn't through Republic, but it's an indicator.
It's an indicator of, so these tokenized asset markets are really new, right? They're effectively no legal place to exchange these tokens. Liquidity is not necessarily there. This is just the beginning of it.
That's right. So also the Aspen St. Regis was another sort
Aspen
of
St. Regis was another
bellwether.
big one.
Something I think that's interesting is I get to sit, I often say I'm a caveman among geniuses, and it's fun because everybody I talk to is generally an inch wide and a mile deep. You guys are doing one thing incredibly deeply, and I get to sit an inch deep and a mile wide. But most people in this ecosystem know nothing about something in the ecosystem. So I wonder if this might even be the first time that we're getting the whole life cycle together in a room and trying to say, oh, that's what you do? Oh, we could work together on that, or we need that, or something. I think it's exciting. Is that part of what you're thinking?
We definitely, we brought a bunch of partners here, but we expect a bunch more partnerships will come out of it. And we've invited folks who other people might see as our competitors to come and join the event.
Yeah, I think that's great.
It's very encompassing and inclusive. That's where we need to be right now.
Great. So once this has happened, how do you see that benefiting the space, let's say 6 months from now?
Well, hopefully we'll have a much more robust market where everybody's roles will be clearly understood, and so we'll be able to work more quickly to get these things going.
Right. And now looking into the Fin crystal ball, let's say 12 to 18 months, is the security token ecosystem going to be $1 zillion? Is it going to be exactly where it is today? Is it going to dry up and go away because of overbearing regulation? What's going to happen?
No, I mean, I think realistically, it will probably be in the billions of dollars. I mean, just with the issuances that we've been working on, you'll get to those types of numbers.
Okay.
I think what will be interesting in that window, that 18-month window, is how much liquidity gets created and how people create new, really creative ways for liquidity. Like we had a conversation recently with a company that's doing, they want to basically lend against securities, which makes sense,
totally,
right? Because in the real world today, you can borrow against a real security. Why wouldn't you be able to borrow against a digital security?
Yeah, it's a huge industry, in
exactly.
fact. Yeah.
So that's something we think we'll start to see happen, and that's another type of liquidity that maybe people aren't thinking about.
Amazing. Well, you heard it here first. Thank you so much again for joining us, and keep coming back and let us know what you're seeing.
Thank you.
Thanks, Jamie.